So the Bank of Canada raised its overnight lending rate. Surprise? Not really. Uh, and many of the economists were saying that the Bank of Canada would raise its overnight lending rate. The Federal Reserve raised its rates about a month ago, and it kind of feels like the Bank of Canada has to follow suit because if they don't, it affects our currency in Canada in a negative way. And that makes it harder for the Canadians or the Canadian economy to buy goods from the US and harder and it's more expensive is what I technically mean. So, and that continues to drive inflation. So some of the glimmers of hope are that the price of fuel has actually gone down a little bit, despite what you see at the pumps versus just a few months ago. So that's an important part in the continuing cycle of the Bank of Canada trying to cool inflation. And really, the only tool that they have is to manage its overnight lending rate, which which is a tool to cool the economy and then cool inflation. Where the hotspots still exist are with price of food and for services. So right now, like core inflation, the Bank of Canada's target is 2%. It's persistently high at 3.5% to 4%, which is a lot better than it was almost 6 or 8 months ago. But we're starting, what the Bank of Canada is starting to say is that, maybe inflation is going to remain at these levels in an indefinitely. We don't know. So what does that mean for the housing market? Well, um, with the housing market, it's really an issue around supply and demand. The reason why we're seeing multiple offers on properties is because there's high demand, primarily from millennials, and low supply. So those baby boomers are not yet ready to sell their house because they've got nowhere to go, right? So what I think will happen is what we might end up seeing is that instead of having 5 offers on a house, we might have 1 or 2, or we might see this idea of having offers with for purchases with conditions. Especially in certain price range and higher price ranges, because affordability is going to be an issue. So again, if it's the Bank of Canada increases its overnight lending rate, variable rate mortgages go up. It doesn't have a direct effect on fixed rate mortgages. Fixed rate mortgages are priced off the bond market, but sometimes they move in tandem. Okay, so a sales opportunity for you is for those clients who've been pre-approved, because we have hundreds of clients who've been pre-approved who have rate holds that are expiring within the next 120 days. You should be following up with those buyers and understanding when the rate hold is expiring and trying to get them into the housing market, because in one, like we have lots of people who've been pre-approved for a 5-year fixed rate at 4.59, 4.79%, and those rates are going to be expiring in the next 60 to 90 to 120 days. So, and that rate is going to go from like 4.69, 4.79 to probably 5.19 or 5.25 on a 5-year fixed. Okay. And that's true with all the other like 4-year, 3-year fixed, one like variable rate mortgage. So if you are looking for a good broker to work with, we always love working with realtors. We believe when the realtor and the mortgage broker are in great communication with each other, that helps the client. So we always love being a member of GDAR and supporting your events too. I just wanted to do a shout out that we are doing a webinar on January the 13th. The topic is really interesting. We have developed a buy-sell scenario spreadsheet for realtors that helps you explain the costs of buying and selling. And it also helps you with negotiating your real estate commission. Because as people are looking at cost of selling a house, they're also asking you to lower your real estate commission. Okay. That's just the reality of the market because people don't have as much money as or equity as they once used to. So please join us on June the 13th. We will be giving the buy sell spreadsheet to realtors who attend at no cost to you. So you want to reach out and join us. Okay. Thank you so much. Have a great day.